Well, hi, Amber. How's it going?
Great. How are you, Sarah?
Doing good. Doing good.
Awesome.
Yeah, glad that we're here together to have this interesting conversation. I think it's very timely
Yep.
that there's some significant pressures and significant things coming down the pipeline that I don't think we're going to be able to avoid. And Amber, I really just want you to dive in and tell us what's going on.
Yeah, I mean, we've sort of been talking about it for a while now, and it seems to be getting closer to being actually like upon us where the Federal Reserve could be tapering on their mortgage-backed security purchases, which means that the plan that they put in place during the peak of the pandemic to purchase mortgage-backed securities to drive down and keep interest rates low could be coming to an end. And at their next Federal Reserve meeting, they could be talking about their tapering plan. Many investors will want to get ahead of any kind of tapering. And so we're already starting to see like little shifts in interest rates going up. Probably, 3 weeks ago, we were sitting around 2.75-ish, and then it was like 2.875. And now we're closer to like maybe like a 2.99. So we're still talking extremely low, all-time low interest rates, but they're creeping upwards. And once they've announced that they are going to be tapering and the plan around that, that's when we're thinking that we could see at least a 0.5% rise in interest rates upon the news. And so we just want to be mindful of that.
The news is what's shifting the market before anything's even happening. People are responding ahead of time.
Yes.
So these changes, even though they've been small, have happened without anything actually happening. Is that what you're saying, essentially?
It's just a reminder that interest rates right now are being manipulated. So they're only this low because of this purchasing plan, which was never a long-term plan. It's gone on for much longer probably than they thought. And at some point, they've got to put an end to it. And they're really watching employment numbers. They're watching inflation numbers. They're really watching the strength of the economy to see when and how quickly that they will end the tapering. But the last sort of predictions I heard would be to start tapering before the end of this year and likely have it wrapped up by like summer of next year. So it'll be like a long process, but probably upon the news is where we'll see the rise in interest rates, because investors will know that they need to take action on the fact that the bond prices will be going up.
And that kind of addresses a number of things, because the mortgage-backed, because the mortgage-backed security and bond purchases, it's been about combined 120 million, right, a month.
Yeah.
And that's a ton of money. And so that they've even gone up to, the Fed is now holding upwards of $8 trillion in federal debt. Like, that's just $8 trillion. That is a lot of money. And so I know why people are saying, okay, we need to not buy this much. We don't need to have this much, held debt, but they also don't want to shock the markets. And so by releasing it and kind of going slowly, the idea though is to have it kind of gradually happen versus like overnight having, big movement. That's the goal, right?
Yes, they're trying not to create the knee jerk, but the writing's on the wall. So a lot of times we don't always have this sort of like crystal ball into what's going to happen. But right now we do have somewhat of a, future vision of like interest rates will be going up. We don't know exactly how much and exactly when, but they will be. So for anyone who's on the fence on a refinance, on the fence of pulling cash out to remodel the house, on the fence of buying that next home or that first home, now's the time. Because when you watch interest rates going up, I mean, Sarah and I were running some numbers, the median sales price is 405. And if home prices, or if interest rates went up 0.5%, that's about $110 a month to the average buyer's mortgage payment. And what I'm seeing is that most of our clients are already at the top end of their budget range. When they tell me like ideally where do they want to be, many of them are ending up at the top, if not over that ideal range that they give me, because that's what it's taking to get into this market. I don't think a lot of people understand really what has happened with prices, what it's going to take to get what they want. And the only expectation is that prices are going to continue to rise. So then we will have rising interest rates and rising prices, and it'll just be more expensive for our buyers. So if you can, buy now before we do see those things go up.
Absolutely. I think this is a huge message that the urgency is now, and we've been talking about affordability challenges for a long time. And I know kind of using just the home buyers index and the affordability index, Phoenix has actually dropped just below what's considered affordable. And that's when we start to see demand draw back and kind of just typical, in just regular affordability numbers. Now, if we've had this, we know rates have been held in, kind of artificially low for some time. So we know the market is going to have to absorb and kind of move along with what the market's going to do, because the market's going to do what it's going to do. But, kind of being aware of this because of the appreciation rates and because of the affordability challenges, this is just going to put more pressure on that bottom line. And we're already constantly up against this. Rentals are not necessarily an easier position anyway. I've heard, people are having the conversation. Rentals cost more than the median rental for the median mortgage with 10% down. It's actually more expensive to rent. And we're at occupancy rates that are the highest that Greater Phoenix has seen in over 40 years. So that's not necessarily going to be a solution to say, hey, I can just get into a rental and figure things out. They're going way up too. So as we're looking at what's happening, and we know, inventory, yeah, it's creeping up, but it's still way lower than where demand is. And we're going to continuously have this pressure for prices to going to go up because, we're up 42% since the lows in April, but that's still just because we had like 7 and now we have 12. Like that's a big improvement, but it's still not enough to make a difference. And so again, going back to the affordability of this all, and people will get priced out. And so now is the time to do it. And there are a lot of people that are kind of thinking, where do I want to go? What's that going to look like? And there is actually a stat Ivy Zellman shared that said 54% of American borrowers have a rate at 3.75% or less. And Amber and I were just talking about that. What does that mean when interest rates start pushing up? Does that, and people already have low rates, they're going to want to hold on to them and maybe make other choices of what to do in their house and stay. And that's, if they're wanting to make that move, the time is, time is now to do it.
Yeah. And we experienced that interest rate lock back when we were locking clients in like the low 3s, and then the interest rates popped up into about the low 4s, which is still historically low, but a lot of clients or a lot of borrowers, homeowners didn't want to give up that really low interest rate because the gap between like, okay, now a higher priced home and a higher interest rate, they just were feeling that impact a lot greater on their budget. So if someone is locked into an interest rate right now at 2.875 or whatever, and they pop up into the 4s, they're going to have to really want or need that next home purchase, I think.
Yes. And I know we don't have an awesome clear crystal ball, but based on this, I mean, where do you think that we might see rates go within, before 2021 ends? Do you think that we would get as close to the 4s? Do you think we'd stay in the 3s? I mean, I know it's projections now. But...
I think we'll range in like the, mid to like the mid 3s, I would think, so we're not talking drastic increases, but even now, some buyers, you quote them a rate at 3.125 and they're like, oh my gosh, interest rates are so high. So we've been super duper spoiled. And so anytime we have like a new normal, it takes a while for buyers to digest that. I think that a lot of clients right now are trying to digest prices and understand that. So it just takes them a little bit. So I think we'll go through some of that. But since we know it's going to happen at some point in the future, the way to avoid that feeling of, I wish I would have bought earlier is to buy now. Because how many clients do we talk to that are like, I wish I would have just bought a year ago. I thought prices were high, but I thought they were going to come back down, and I cannot like even, think about it too much because it just drives me crazy on what could have been. Yeah.
What could have been, because their average, taking the median sales price has gone up $100,000 in a year. And it's like, so we know hindsight's 2020. We're saying it now. We know it's happening. So this is our kind of plead to anybody on the fence. Do your homework, know this is happening, and kind of move things along, because this window is not going to last forever.
Correct.
Well, I think that's a pretty strong message there, Amber.
Yeah, if you guys have questions, let us know. We love to
Definitely.
provide, just information to help everybody make more educated decisions in regards to their real estate transactions. So thank you so much for having me today.
Exactly. Well, thank you for your time, and always your insight is incredible and helpful as we, navigate our crazy market.
Yes.
Awesome.
Thank
Well,
you,
thanks
friend.
again. See you
Okay.
later.
All right. Bye-bye.